Good morning and welcome to Life at Noon. My name is Rachel Hugenberg. I'm one of the librarians here, and I'm really excited about today's live program because I'm at that stage of life, sneak in a pun somewhere, guys, come on, where looking at houses and homes is a part of what you start kind of wanting to do, but right now, Houston is one of the hottest real estate markets around, and things get snapped up very, very quickly. So at Life, we wanted to bring in an expert about real estate. So this morning, we have in Lavar Harden, who is an expert real estate agent, and he's going to be discussing with us the process of smart home buying. Lavar, if you would please take it away.
All right, Rachel, thank you so much. I truly appreciate the opportunity to meet with you and your viewers and discuss our smart home buying system and how to save thousands. So let's get rolling. All right, so welcome to our smart home buying system. I want you guys to feel free to ask questions at any point through the chat box. Rachel will be monitoring the chat box while we move forward. All right. So, key points for today's presentation: home ownership fears and facts, the smart home buying system, and 8 steps to home ownership. We try to keep it as seamless and simple as possible. So a little bit about myself. I am the owner, operator of the Harden Real Estate Group here in the Houston area. I've been in real estate for 15 years. Originally got licensed back home in Chicago. I've been licensed here in Houston since 2015. I've helped well over 1,000 families. I specialize in new construction. Anyone from the area knows that at any given time, there's about 200 new construction communities going up at any given time here in the Houston market. So that's how I figured out the layout of Houston, is actually just visiting all of the new construction locations throughout the Houston metro area. And I was able to determine, the differences between, let's say, East Downtown and Sugarland, or Katy and Pearland, Humble, Kingwood, all of the neighboring communities here in the Houston area. I'm also a real estate investor. So I've been investing in real estate since 2009. I am a licensed Texas real estate agent, and I am, so today I want to get started with home ownership fears and facts. And a lot of these fears are not arbitrary. It's what people hear. And they just continue to share this information with me. They hear it, so they continue to actually say the same thing over and over. But my job is to kind of put those fears behind our clients. Okay, so the first one is, I can't afford to buy a home right now. And just being completely honest and transparent, actually, you can't afford not to buy a home right now with the historically low interest rates, as well as the appreciation. We'll go into that in a little bit later in the presentation. But as home prices rise, so will rental rates. The reason that this happens is because the owners of single family properties that are leasing them or renting them out, they have to cover the mortgage. They have to make some type of return on the property. Therefore, if they purchase a property at the top of the market, the tenant will have to pay a premium price to rent it, to lease it. So you might as well get into your own home. Another fear is people don't have 20% to put down. And that's just a huge, huge fear. I hear that quite often. And that's because in previous generations, 20% was the standard to put down. But when I say previous generations, I mean like 60 years ago. there's a variety of down payment options available to buyers today. So as low as 0% down for buyers that qualify. I do have specific lenders that I work with that provide 100% financing, $0 down, as well as options when it comes to closing costs, right? So closing cost contributions can come from the sellers. You also have an FHA loan, which is 3.5% down. And for our veterans, there's a VA loan in which they can utilize their VA benefit and put 0 down, 100% financing. So there's a lot of different down payment options aside from the 20% down option. Another fear is I can't afford to buy my dream home. What people don't realize is today is not 60, 70, 80 years ago when people would get into a home and they would stay in that home for 30 years, 40 years, 50 years. The best way to get closer to your dream home is actually buying your first home and trading up at some point. So we'll go into that in a little bit as well. So our smart home buying system. So we've adopted a proven, repeatable system backed by market research to find the perfect home for our clients. So there's over 85 variables involved in the home buying process that can be proactively managed upfront to ensure you find the perfect home negotiated at the best possible price and terms. We have narrowed these 85 variables down. I know that's a lot. 85 is a huge number, but we've narrowed that down to 7 factors that give our clients an advantage to negotiate the best possible terms, as well as concessions in order to spend the least out of pocket. And we'll go over that. So first and foremost would be expert advice, and that's actually using someone that's in the market on the daily basis. Next would be your homeowner responsibility. So aside from paying for your mortgage, you are responsible for the upkeep of a property. The home equity swing. You probably have no idea what that is, but we'll get into that. The ideal home at the right price, negotiation and the offer strategy, closing the sale, and then lifetime vendors for after the sale. So expert advice. My job is to determine your motivation and your timing. Most people that inquire about purchasing a home are in the beginning stages and very early stages and really don't know where to start, frankly. In 90% of people's actions, what happens is if you have the action or the thought behind purchasing a home, the only people that actually do it are the ones that are actually truly dissatisfied with something in their living situation, whether it be, okay, I can only afford to pay this amount and our landlord is going to go up, 5% or 10%, at least renewal time. Or I want to live in one specific area and I can't afford that area to lease, or they don't have homes large enough to accommodate my family size. So typically there is some type of dissatisfaction that will help you jump over all of the hurdles that come with homeownership. They do come. It is what it is. The other thing is I want to figure out my client's goals when it comes to homeownership. We'll discuss the financing programs that may be available to them, a credit analysis. So any lender that I work with has committed to help my clients understand why they are not qualified right now and what they can do to qualify in the future for those that don't qualify for a home immediately. Okay, and we'll do an out-of-pocket expense review. So there's 2 numbers when it comes to purchasing a home. The first is going to be the sales price. That's the big number. So let's call it $300,000. The other number is the budget, right? That they feel comfortable paying on a monthly basis. So what does that look like? So we determine that with the help of our lender and obviously whatever the client is most comfortable paying on a monthly basis. So cannot say this enough. The first step to homeownership is actually getting pre-approved. A lender will review your income, your debt, your credit, the cash that you have for down payment, as well as the capital that you have to put toward your closing costs to determine your credit worthiness. There are upfront expenses. The most common are going to be your earnest money deposit, the option period fee, and a general inspection. Okay. So the earnest money deposit is a 1% deposit made by the buyer, and it's held by the title company. Okay. So if you're making an offer of $300,000 on a home, then it's $3,000 to be held by the title company. It's credited toward your down payment and or closing costs, and it's refundable if the seller terminates, or if you are looking at backing out for any reason during the option period. And speaking of option period, an option period deposit is due with the offer as well, or with an accepted offer. So this is a payment from the buyer to the seller for the unrestricted right to terminate during the option period. And it's non-refundable, but it's typically a couple $100, like $200-300. Anyone would be willing to give $200 or $300 to make sure that they have the option to terminate the contract. Okay. And then the third out-of-pocket upfront expense would be your inspection. So an inspection is typically $300 to $600, and it'll be a general inspection of the property. And then homeownership responsibility. Knowing your responsibilities upfront can minimize the number of surprises, financial or otherwise, as well as regrets that could come up. Okay, so there will always be future maintenance costs, from heating and cooling your home to securing the property or protecting your home. Yes, there is a lot to consider when purchasing, but my job is to make sure you look at all angles of home ownership. One way that we protect our home up front is asking that the sellers provide a home buyer's warranty on your home. So what that is essentially a concession that the sellers are offering, typically between $500, $600, $700 for a 1-year warranty. A warranty is a service agreement that protects a home's major systems, as well as appliances from everyday wear and tear or just accidental breakdowns. Now, the difference between, because I get this question a lot. So if I have homeowner's insurance, which anyone that has a mortgage, they're required to have a homeowner's insurance policy. So if I have homeowner's insurance, why do I need a homeowner's warranty? So the difference between the two is your homeowner's insurance is hazard insurance and only covers items damaged in fires, flood, maybe items due to wind damage or theft, or worst case scenario, any type of liability for harm to others that happen on your property. That's covered by your homeowner's insurance policy. Your warranty will cover your major systems. So your AC system, your appliances, your plumbing system. So the two are totally separate and different. Home equity swing. So this will maximize the equity you earn on your home and build long-term wealth through home ownership. Okay. Typically, people have one mindset when they go into purchasing a home, and it's a completely emotional mindset, which I completely get, I understand. But my job is to put you into an equity mindset. And what that looks like is, are we purchasing something in an area that is known to appreciate over time? What are the numbers trending in this neighborhood or in this area, or this subdivision, right? So we want to make sure, even if we're purchasing something at the top of the market, which is where we are right now, even if we purchase something at the top of the market, we want to get an idea of what the past history looks like when it comes to equity, okay? Any lender that I work with, they'll provide a worksheet. Once you're pre-approved for a specific amount, this worksheet will give you an idea of what your monthly payment would look like, okay? And we can do a comparison for a 15-year or a 30-year. You have those options, 15-year, 30-year. If you're paying for a home and it's a 15-year mortgage, it's going to be more monthly than in a 30-year. However, you pay the home off a lot sooner, okay? And then, is this something that you're going to purchase for a short term? Do you plan on let's say a married couple. This happens all the time. A married couple, they'll buy a 3-bedroom, 2-bath home. And then when they start having children, they feel like they need a larger home. So what's your long-term plan? What is your short-term plan? And where does the home fit in? Okay. And then even a rental property analysis. So if we look in any specific neighborhoods that fit your criteria and your price point, is this the type of home that you'll be in short term? And maybe perhaps at some point when you sell it, when you look to upgrade, can you lease this home? Is it something that someone would feel comfortable paying a monthly rent rate on? So we just try to look at all exit strategies when purchasing. And then another is the 13th payment. So making an extra mortgage payment each year could reduce the term of your loan significantly. So the most budget-friendly way to do this is to pay 1/12 extra each month. So for example, if your mortgage is $1,600 a month, why not pay $1,733? And at the end of that year, you'll have a 13th payment that you've contributed towards your purchase. Okay. My job is to find the right home at the right price. Now, how does this happen? Okay. I live by the motto, love where you live. There will always be the possibility of hidden landmines when purchasing a home. And what that looks like could be a property lien, an encroachment, an easement. What does your insurance report look like for the previous homeowners that have lived in this property? Does the seller have the right to sell this home? Or at some point, will additional sellers pop up and say, we all have claim to ownership of this property and it can't be sold? So these are things that happen. If these arise, a great agent will be able to guide you through the process. Now, you don't want to sacrifice the lifestyle that you've become accustomed to just for your home. That's where resentment comes in at, okay? If things like proximity to work, fine dining, shopping, or the gym are important to you, they should still remain important to you when you purchase your home. If they're important to you, they're important to me. We'll review your price, the age of homes that you're open to. Do you want something that's new construction? Would you prefer something that you can update, perhaps, right? A lot of people are saying that they like homes with character instead of a cookie cutter subdivision type of home. You know, how many bedrooms do you need in relation to what you want? How many bathrooms do you need in relation to what you want? Are they the same? Can you afford your wants and needs? Again, right home at the right price without making a complete sacrifice, okay? We'll also review both the amenities for the specific home as well as the neighborhood. So when I say amenities, right now, a lot of people are working from home. So something that's important to a lot of buyers is an office or a dedicated study in which they can set up, you know, as a work office and work from home. And then the offer strategy, leveraging negotiation strategies so you end up with the best home at the best price, terms, and conditions. So it's not exclusively about the purchase price. There are many negotiation conditions and concessions that can make or break a deal outside of just the price. So what that looks like is the home warranty, the inspection report findings, closing costs, the closing date, seller paid buyer concessions, option period deposit, the earnest money deposit, how many days for inspection. All of these are considered when a seller accepts an offer, okay? So we want to make sure that we have an idea of what the seller is looking for to present them a fair offer, an offer that makes sense for both parties, okay? There are so many contingencies and conditions that make up an offer. Another would be who pays for the survey, who pays for the title policy, who pays for the homeowners association transfer fees and the documents. Just so much to review, so much to go over. But my job is to make sure that out the gate, we understand what expectations are ahead of us, right? So there are positions of strength and weakness for both the buyer and the seller. Without saying my job is to get over on the seller, because that's not my job. My job, quite frankly, is to put you in a position to have an accepted offer when we find the right home at the right price. And then closing the sale. So realtors do much more than solely helping people find a property. Now, nowadays, about 99% of homes listed are on the phone. You can access, any MLS in the country just by utilizing your phone. You have access to 99% of the listings in the United States. The reason you need a specialist or a realtor is to manage the transaction from contract to close. So we manage the timeline, the milestones that you're responsible for meeting. This is a contract. You are under contract. You are putting up earnest money, which is 1% of the sales price up front. My job is to protect that, okay? I manage the inspection timeline, the repair negotiations, if there are any, and then obviously the amendments and settlement review before we close. And then when you're working with an agent, you have lifetime vendors, right? So because we're in this business full time, we should have access to several lenders, several title companies, several cleaners, landscaping, moving companies, painting, remodeling, pool services. I have access to all of that just by being a real estate agent, okay? And then here are the 8 steps to really get into real estate as homeownership goes, okay? So the first and foremost, is you have to make the decision to buy. I cannot make that decision for you. Only you can do that, right? If you're a couple, make that decision together. The last thing that I hate is to see people, say one party wants to purchase, the other party feels like they're not ready, and then they call me and I'm stuck in the middle, right? Make the decision on your own. I'll always say the best time to buy was 5 years ago, 10 years ago, 20 years ago, which means today is the best time to buy. Because if you ask me tomorrow, I'll say it was yesterday, okay? You have to secure financing. And what that looks like is, even if you are not in a position to purchase a home, once you make the decision that you're ready to purchase a home or that you want to purchase a home, you have to secure financing. You have to go through a loan application. Again, the lender will take a look at 4 major factors: the amount of cash that you have for closing and for down payment. You have your credit score, your income, and your debt. Your debt tells your debt and your credit score will tell your credit worthiness based on your past history. Your income tells exactly how much you can qualify for, okay? Next, you want to hire your agent. Then we find your home, we make an offer, we perform due diligence on that home, we close, and you have to protect your home, right? So by the numbers, I am a numbers person. I love data. I love providing numbers to clients. So by the numbers, buying your first home is an emotional decision. Home is where the heart is. It's also a very rational decision. Home is where the wealth is. So according to the US Federal Reserve, the median net worth of renters is $6,300. The median net worth of homeowners is $255,000. I mean, most of that is going to be equity in their home. That's a huge difference. You're looking at 40 times. I can't preach it enough. Home ownership, it's where the wealth is. You grow wealth by building up equity over time as you're paying down your debt, as well as appreciation happening at the same time. So these 3 things are occurring and your equity continues to grow. As your equity grows, you go from that median net worth of renter, $6,300, to $255 or more, right? That's just the median number. Making a decision to buy a home is an accidental investment that creates leverage opportunities. So every single time you pay your mortgage, you're contributing to your net worth by increasing the equity in your home. So how is your home actual leverage? So in a few years, you can use your equity to trade up to a bigger home, let's say a better neighborhood. Let's face it, some neighborhoods are better than others. for whatever reason, whatever better looks like for you and your family. Perhaps a better school district, whatever better looks like for you and your family, a closer commute to work, or even just a newer home. People have tons of reasons under the sun to get a new home. Or you can use some of the equity that you've accrued over time and apply it to a rental property as your first investment. So renting versus buying by the numbers. If you took out a 30-year fixed rate mortgage for $250,000 and made monthly principal and interest payments of $1,036, so that's just principal and interest, not taxes and insurance, you'd pay $373,000 in P&I over the life of the loan. Okay. Now, after 30 years, you'd own the home outright with an appreciated value of $480,000. And that's only at a 2.2% annual appreciation. Now, obviously, appreciation rates are going to vary greatly from neighborhood to neighborhood, subdivision to subdivision, city to city. However, I pulled up some data. I posted this on Facebook. First quarter of this year, first quarter of 2021. So according to the Federal Housing Finance Agency, Texas's real estate appreciation rate was 3.97 per year from 1991 to 2020. This means if you purchased a home in 1991 for $100,000, it would be worth $322,000 today. Now, that's just Texas overall at large. So even if our appreciation rate slowed to 50% of what it was the last 30 years to 1.98, if you purchased a home today for $250, it would be worth $450. Now, if the appreciation rate remained the same that it was in the previous 30 years, it would be worth $804,000 in 30 years. Just think about that, all right? You can't say that when you're renting, and here's why. Rent versus buying. Even if the landlord improperly never raised your rent over 30 years and you're paying $1,100 a month, you'll spend $396,000. Now, if your landlord raises your rent by 1% per year over 30 years, you're looking at almost $460,000, okay? You might as well purchase a home. Again, first step, secure financing. A lot of agents don't really go into the weeds when it comes to this data that I'm about to provide, but it just helps people get over the hurdle of not knowing how lenders come up with the numbers. So you have a front end ratio and a back end ratio. So your front end ratio, typically lenders want to see that your principal, interest, taxes, and insurance payment is no more than 28 to 33% of your gross income before taxes, okay? Now, for example, let's say your gross monthly income is $5,142, and I'm using that number because that's the median for Houston, and your max housing ratio is 33%. So that means the maximum limit you can spend each month for principal, interest, taxes, and insurance is $1,700 basically, okay? Now, on the back end ratio shows how much of your gross monthly income is needed to cover all of your debt, including your mortgage payment. And this can range 35 to 45%. You calculate it by looking at all of your monthly payments. So your car note, child support, credit cards, student loans do not include any other monthly expenses. And then you're looking at basically $2,300 per month in your principal, interest, taxes, and insurance, or your mortgage payment, plus all of your other monthly expenses and debts. Next, you hire your agent. Like I said, as a real estate agent, we're in this business every day. However, we cannot work with people that cannot commit to working with us. So the buyer representation agreement needs to be signed by both parties. This sets mutual expectations in writing between you and your agent. It commits your agent to getting you into the home you want while you commit to working exclusively with that agent. Yes, again, you can hop online all you want to find a home. 99% of properties are online. However, you still need a specialist to help you get to the finish line. Okay. And then once you find your home, once we've actually defined the criteria, your wants and needs, we dig into actually making an offer. Everything in a real estate transaction is negotiable. So who pays the owner's title policy, the survey, buyer's home warranty, closing cost contribution, property owners association, all of those items make up an offer. You'll want to look for layout, a sense of value, convenience of location to work, school, and whatever your lifestyle looks like. So whether that's the gym or frequently dining out, we're looking at completely different things when we're in a home. That's what you're looking for because you're going to live there. I'm looking for, okay, is this home safe? Is it structurally sound? How are the major systems looking, visually? Am I seeing cracks throughout the home? Does it look like it needs some foundation repairs? So those are the things that I'm looking at simultaneously as you're looking to see if this home fits you and your family's needs. Okay. Again, upfront expenses, earnest money, the option period deposit, and the inspection. The option period deposit is very important. You're only paying $200 or $300 just to make sure that you have the right to back out of the contract. You'll negotiate the amount of days that you have to back out. So typically it's about 10 days. However, in this market, considering we are square in a seller's market, we're seeing 5 to 7 days for the most part. And then obviously going to do an inspection on the home. I cannot recommend enough. You want to have an inspection on the property. Making an offer, obviously the price, and it must reflect true market value of the home. So why is that important? Because the home has to appraise. If you're taking out a loan, and let's say you're putting 10% down or 5% down, then the bank is providing the financing for the other 90 or 95% of that property. They want to make sure that the sales price that you agree on with the buyer is the true value of the home. So let's say, $300,000 home, and you make a $400,000 offer just to get the home. That home will not sell for $400,000 if the market doesn't say that it's worth $400,000. And the lending institution needs to know that, okay? So the terms will address the timing. So how quickly would you like to close? And then the financial considerations. Again, what is your down payment? Conditions allow the buyer to opt out of a deal if the home has a problem with, let's say, the inspection report. So let's say it looks like the roof is going to cave in, or there's just electrical issues that can't be remedied quickly for a decent number or decent price. Then, you might as well move on to the next home. If the seller will not agree to do any of the repairs, we're moving on to the next home. And then third-party financing. So buyer approval. Typically, when we make an offer, we'll ask for 21 days for which you have buyer approval. So buyer approval and the home's financing approval are not the same thing. Okay. So the lender will look at all of your documents to confirm them, right? They want to make sure that you're employed. They want to see your last couple of years W-2 or 1099s to just verify everything. They want to do a verification of employment. You have about 21 days for that, okay? However, at the same time, the home has to meet lender requirements. And what that looks like is, does it appraise? One, and then is it insurable? So as soon as we go under a contract, we will be submitting insurance quotes. You want to make sure that you have an insurance quote on the table as well. Okay. And then performing due diligence, so the inspection, insurance policy, and appraisal. Inspection, we're looking for safety issues primarily. So cracks are crumbling in the foundation, cracks inside the house, any mold issues. This is Houston. I mean, it's hot 90% of the time here. So we want to make sure that there's a working AC in the home. That's very, very important. It's paramount. And we want to also make sure that water is not penetrating the home. Water leads to so many issues when it comes to home ownership. And now, what if there are issues? We have several ways to remedy those issues. One would be we can ask the seller to remedy the repairs. So whatever repairs are safety concerns, major issues for you, the buyer, we'll say, hey, we're still in our option period. Instead of us backing out, how about you fix the AC unit? Instead of us backing out, how about you fix the furnace? Or how about you fix the plumbing system or any other issues? If the seller does not agree to do that, we can always say, okay, these are not major issues. These are minor cosmetic issues. So instead of us backing out, which we have the right to do, how about you give us $1,000 off of the sales price? Or how about you give us $1,000 from you, from the seller, to be contributed to our closing costs? Okay, so we have a couple ways to do that. And then again, we're in a seller's market. So in some cases, sellers are not offering a home buyer's warranty. Okay, if the issues are minor and they are specifically wear and tear issues, while we're in the option period, we can ask for the seller to cover a home buyer's warranty, just to accommodate the repairs that we've seen or the issues that we've seen based on the general inspection report. Okay. Now, closing and funding. We're almost at the finish line. So pre-closing responsibilities include appraisal. I've mentioned that before. Survey. So your survey is the outline of the property to make sure that there are no encumbrances or easements on the property. And if there are easements, are there easements that you can deal with? And we want to make sure that there's no encroachments. So the home does not encroach onto your neighbor's property, or your neighbor's property does not encroach onto your property. Okay. We'll do a title search. The title company, which is a third party to facilitate the transaction, they'll look at the existing title of the home to see who owns it and if anyone else has ownership rights to the property. Okay. And then title insurance. They'll also ensure that the title is clear before closing. Okay. During this time, you have to keep yourself mortgage worthy. What that looks like is you're not applying for new credit cards. You're not applying for a his and hers Corvette, right? You're not applying for appliances, or you're not adding to your current debt that you have. So you're not, going to the furniture store and buying $15,000 worth of furniture 2 days before closing. We don't do those things. We have to make sure that you keep yourself mortgage worthy. Your debt should not increase during the 30-day period, 30 to 45-day period in which you'll be closing the home. Okay. Then we do a final walkthrough before closing, typically either the night before or first thing in the morning, right before closing, because we want to make sure the home is still intact and look like it did when we first submitted an offer. And then the countdown to closing, getting your settlement statement, certified funds, and then evidence of insurance and transfer of clear title. So your settlement statement will come to you from the title company, again, the third party. They'll take the lender information in 3 days, at least 3 days before closing. They'll tell you exactly to the penny how much you need to bring to the closing table to fund the transaction. You'll either do a wire transfer or provide certified funds. Okay? And then evidence of insurance is the lender wants to make sure that you have a homeowner's insurance policy on the home. And then if there were any issues with the title at any point during the transaction, the title company will make sure that the title issues are cleared before closing, even day of, as long as title policy is clear, you're good to go, you close. And we are at the finish line. You have a new home. Congratulations.
Okay, thank you so much, Lavar. We really sincerely appreciate you coming out to life today to talk about the home buying process and how we can be smarter home buyers. I definitely feel like I have learned a lot from this significantly. And I'm sure that our viewers also have as well. Does anyone have any questions for Lavar? You are welcome to put them in the chat. You are also welcome to unmute yourself. J-Rod has asked Mr. Harden, will you put up your contact information?
Yep, absolutely.
Yes. And we will also be sending out a thank you and follow-up email with Mr. Harden's email and URLs. So just watch out for that because we do like to do that at Life. Are there any other questions? Okay, so we're getting a thank you from Lourdes. One of the things I'm wondering is, can you buy that sort of home property upkeep deal
Oh, the home warranty?
on your own? Yes.
Yeah, absolutely.
Separately, because I know with a lot of houses, it doesn't come as an included.
Right.
Is that worth the cash?
Yeah. So what it looks like is typically $500 to $600 a year. Yeah. So, I mean, the cost to fix an AC unit or replace an AC unit is well worth, a couple $100, a year. So.
Indeed. Deanna saying, learned a lot. Thank you so much. I completely agree with her. This has been a real life experience, learning about purchasing homes. Raul Munoz has said, this seems to be a seller's market. I know we can't predict the future, but do you have a guess at how long this might last or factors that might change that?
So one of the reasons that a lot of people that are not in the industry know that it's a seller's market is because everyone's saying it's a seller's market. Houston has been a seller's market for over a decade. Over the past 10 years, Texas has seen 3.7 million people move here. Those people need homes. Anytime that there's less than 6 months of worth of inventory on the market, it's a seller's market. Right now, it's just, our inventory is like 45 days. So there's no crystal ball at all. There's no way to tell. You have to take into consideration, Houston is an anomaly, no matter how you look at it. Houston has the world's largest medical center, as well as the world's largest energy sector. So it's just driving people to move here. So we don't know how long it will last. However, with all of the space and opportunity here in Texas at large, it may be quite a while. So the people that were on the fence 2 years ago, they're kicking themselves. The people that were on the fence 5 years are really kicking themselves. The best time to get in the game is right now, Good question, for sure. And it's a question that I hear quite often. But supply has been down for several years here in Houston.
Okay, so right now that's all the questions that we are seeing, though. Okay, we have another one from J-Rod.
Mm-hmm.
Concerning the inspection, you mentioned a general inspection is done. Is there any other depth or thorough inspection available?
So a general inspector would look at every aspect of the home, right? So they'll look at all of the major systems and they'll make a recommendation and they'll say, hey, based on some issues that I see in the plumbing system, you may want to have a plumber come out. Based on the issues that I see on the electrical system, you may want to have an electrician come out. So during that option period, that's why I always recommend to get the inspection immediately, like as soon as we go under contract. because you want to make sure that if you need another inspection, you have the time to have it done.
We also have a question from Lourdes. How would you recommend to start investing in real estate?
Oh, that's such a loaded question because there's so many types of ways to invest in real estate. Are you looking at investing in single families or multifamilies? Are you looking at, do you already have a home with equity? You can take some of that equity out without selling your home, doing a home equity line of credit. Take that cash and apply it to another investment property. So there's just so many different routes to take when it comes to that. But feel free to text Smart Buyer. You'll get my calendar, and we can kind of go over that into detail one-on-one for sure.
J-Rod has asked, would your organization be able to help a retired couple receiving SSI and living on retirement funds?
Yes, as long as it's fixed income, absolutely.
Okay. All righty, I'm going to wait just a second to see if any more questions roll in, but this has been a real education, Mr. Harden, and I feel like I've learned a lot about the Houston real estate market. I think we all have, and what valuable knowledge and advice. J-Rod has said, do you usually work with banks or mortgage lenders exclusively?
A combination. Some people, prefer to use their own lending institutions, so their own banks that they have relationships with, that they've, been banking with for 30 or 40 years. That's perfectly fine. The difference is I let them know, your bank won't answer the phone after 5 o'clock. Your bank won't respond immediately. They're not going to text you. They're not going to respond, the availability just isn't there. And typically what banks are looking for are people, quite frankly, with stellar credit, stellar income, and limited debt. I do work with mortgage lenders as well. Have great relationships with mortgage lenders, as well as credit unions too. So one of the credit unions, or a couple credit unions I work with, have 0 down, 100% financing for approved buyers.
Okay. I'm going to give it, we're seeing some of the lowest rates in some 50 years. Do you think this might last beyond 2021, or is this the right time to look at our options?
So I don't see interest rates going back, as low as they were just a couple months ago, because it kind of created a buyer frenzy. However, 4% is still low. And what I mean is, if you look at the 80s, interest rates were in the 20s. So it's a significant difference. Low is low. So 4%, in the 3s, the high 2s, all of that's considered low interest rates. Right now, we're still in the 3s, in the low 3s. Beyond 2021, it may go up, or it may stay the same. I honestly, truthfully think it would have to go up, though. The reason being is, again, the lower the interest rate, the more home a buyer can qualify for, because your mortgage is made up of principal, interest, taxes, and insurance. So if they keep the interest rates historically low forever, buyers will qualify for more home. And when buyers qualify for more home, sellers get greedy. So, it's, and it also brings more buyers to the market. So it's just straight up supply and demand. No matter how you slice it, it is squarely supply and demand. We have limited supply, and the demand is great. 1, because we're in Texas. 2, because we're in Houston. And 3, because, Houston is the 4th largest market, and the numbers, median price point in Houston is still below $300,000. Well, you compare that to New York and LA, where it's $700,000 and $900,000. The pricing can only go up. So
All right, and we have one last question from J-Rod. Should a first-time home buyer ever consider buying an as-is home where the seller refuses to make any repairs?
So in Texas, our Texas Real Estate Commission contract for a single family home is actually an as-is contract. What that means is a seller is not obligated to make any type of repairs. So anyone that has purchased a home in the state of Texas purchased with an as-is contract. However, during your option period, you have the option to request to make the repairs. We don't do it when we first go into contract. We do it during the option period. If they refuse to make any repairs, that's fine. Are those repairs that you can live with? Do we have any quotes or any idea how much it would cost you? But, you know, at one point, there wasn't much of a gap between new construction and resale homes here in Houston. And that gap is continuing to widen and widen and widen. So in some cases, people can't even afford to purchase new construction homes anymore. They have to go the resale route. And if they're dealing with a seller that's refusing to make repairs, I mean, that's why we have the option period to back out.
All right, and we are getting a thank you, Mr. Harden. You were very thorough and knowledgeable about this, about presenting this subject.
Thank
From
you.
J-Rod, and Raul Munoz has said, Mr. Harden, thank you for your time. This was great. Also, thank you, Ms. Hugenberg. Thank you all for coming. It's always great to see you guys out here at Life and to be able to give a program that gives somebody a hand up and makes them more knowledgeable about what's going on, especially with such a well-spoken and well-versed expert like Lavar here. It's just, it makes my day. It's just insane. Period. But thank you so much.
Thank you for having me. I truly appreciate it.
And it's been a wonderful experience having you here on Life, and we have learned a lot from you, and hopefully our patrons will continue to learn a lot from you as this is recorded and will be also posted on our YouTube. That way they can, you know, if you can't make it at noon, it's okay. We have it accessible at all times as well. And I'm so excited because there are many different parts of Life. And next week we are getting to, I beg your pardon, getting to explore a very different part of Life, because next week we are having on a certified hypnotist named Robin, who is going to be talking about hypnotism and willpower. So do join us for that at noon next week at Life, and we will see you then. Thank you so much.